Good afternoon. My name's Craig Cobb, and I'm the founder of TraderCobb.com. Look, I've been trading traditional markets I've been trading for 13 years. Traditional markets, gold, silver, commodities, stocks, bonds, everything you can imagine under the sun, and FX, of course, and got really, really bored of it, to be honest with you. It does get really lonely, and it does get really boring. If you're any good at it, you get to a point where it's just kind of, you become robotic, and it's quite frustrating sometimes when you're doing things by yourself. It sounded like I had the best life ever. I live at Bondi. I've just come from the beach now. It's hot outside, I'll tell you that much. I was diving twice a day. I was going for surfs. I was having a great lifestyle, but I was really not fulfilled at all. It was really, really, like, there's a certain party that can do that for a certain amount of time. And then you get to a point where you're going, I'm sort of 32 years old at the time. I'm like, I want to do something else. And crypto came along. July of 2017 is sort of when that whole journey came into it. And I was introduced to it in 2013. And as a foreign exchange trader for the most part, I just sort of went, you can keep your World of Warcraft money. I'm not interested in that. There was no volume, there was no charts, there was nothing for me to sort of ply my trade, so to speak, within those markets at that time. It was just too difficult, all right? It was just too difficult. And look, a lot of my mates that still trade FX and run funds and whatnot all around the world, they're still in the same boat. They're saying, look, it's too difficult. I can't be bothered. I'm making enough here. It's cool. I don't need your crazy internet money, right? But it is changing. And what we've got access to when I went and had a look at it in 2017 is charts. Now, I was introduced to it again in 2017 by a business mentor of mine. And when the right person just drops the right message at the right time, and you go, he's like, Cobby, you've got to have a look at this market, mate. And I went, really? Really? And he goes, yeah, you've got to have a look. So I did have a look, and I went, wow, okay, this is something I can do. It falls right within my very narrow skill set. I'm not the smartest person in the room, except for when I'm by myself with the door shut. And I make no qualms about that. I know what I know, and I'm good at what I do. It just so happens to be a very, very particular skill set. Trading is one of those things I'm good at, and apparently I'm good at talking to people, because lots of people seem to want to talk to me or listen to me, which is still beyond me. But that's what I do. I read charts to find out where to buy and sell, and that's what today's talk is really about. Now, there's a few characteristics when it comes to markets. One, it's price measured by time. That's it. Now, when I teach people to trade, and when I trade myself, it comes down to that simple thing, logic. You can either buy or you can sell. Now, what people often get caught up in is all the fancy indicators. I did that for 3 years. It cost me a fortune. I learned the really slow, painful way. I'm honest with that. Really, really slow and painful way, actually. But I learned from those mistakes, got a mentor, and I've now done quite well with it. But the bottom line is, all those indicators, all these flashing lights, that's what they are. They're flashing lights. They're there to distract you, and they do a damn good job of doing it. Buy or sell. Buy or sell. That's all you can do in a market. If you go to the markets and buy a banana, you can buy it or you can be the person selling it. That's all you can do. So don't overcomplicate the process. Markets move in cycles, just like, if I know that there's futures in all sorts of different products now. Commodities, you've got your pork belly, orange, orange juice, soybeans, all sorts of more, expansive products out there as well that have lower volume, but they're available. Futures markets are available, and futures markets are available in this cryptocurrency market now too. One of the things that is in common is, again, that buyers and sellers. So every question you need to be asking yourself is, who's in control, the buyers or the sellers? That's really all you need to know. And I've got a way of doing that, whether you're looking at any market at all. I'm going to focus on Bitcoin and the crypto asset space right now, but you can look at this in any way, in any shape or form, whether you wish to be a trader or an investor. So let me introduce you to a couple of the things that are on my chart. And by the way, what a spectacular 2 days Bitcoin has just had. This market's ridiculous. So I stopped trading for 12 months because I was so bored. I went into property and started lending people money. You know, remember when everyone was selling property courses and everyone was buying property courses and everyone was trying to buy the house next door to do a subdevelopment, put 2 houses in there or two, you know, a duplex, and no one could get the money together because everything was going so quickly. The market was just going absolutely nuts. Remember that period? Yeah, the enthusiasm here is amazing, by the way. Well done. That's a joke. It's been a long day. I know. I've just come in here, so it's okay. I'm getting the end of day tired eyes. It's all good. I understand. But yeah. So when that was going on, I was just lending him money because I got sick of the market. Look at this thing. Today alone, 11%. Are you kidding me? Look at yesterday, 16. And the best thing about it is because I'm a trader, markets go up really fast, markets go down really fast. What's a trader want? Fast-moving markets. We want volatility. You will not find another market in the world with more volatility than the crypto asset and digital asset space. Sure, look, it comes with its own set of risks, don't get me wrong. It comes with its own set of issues, don't get me wrong. But look at the volatility. If you happen to be Johnny on the spot and bought yesterday afternoon, you're up 37% today. You kidding me? So, how do we know when to buy and sell? And look, don't get me wrong, like for me, there's nothing that I do or teach or anything that shows this was going to happen. So, you know, I'm not here to go, I was ahead of this move. I certainly wasn't. I was actually short Ethereum yesterday, right? I got stopped out. I lost money. Big deal. You know, that's trading. Shit happens, right? But there is some certain things that are the patterns that reoccur, and it's not that difficult to work with, and it works on any time frame. So let's do that. Right. So what you got here, for those of you who are going, oh my goodness, what on earth is that I'm looking at? It's colourful, there's lots of stuff on that. Actually, there's very little here. Each one of those candles, and they're called candles because if you lit the top, it would look like a candle, right? That's how they got the name. That is a candlestick. That is the daily time frame. 1D stands for 1 day. Get your mind out of the gutter. And you can see here, it's just price measured by time. That is 24 hours of time, and that is what the price has been. Fairly straightforward. Now, it's a succession of these candles coming together that forms trends. And now, I am a trend trader. I'm not looking to catch the bottom. I'm not looking to get out at the top. I don't need bragging rights. I don't care. I will make losses. I will have wins. I will have people that don't like me. So do you. We're all human beings, and we've got to understand that that's what I'm measuring on the chart, is human emotion. All right, so let me just jump out a bit and go, let's put my, my investor hat on and consider this market from somebody who doesn't want to necessarily be an active trader. So how can this help you? 2 things. 1, we're going to focus on first these 2 squiggly lines. That white line there is my 10 EMA. That stands for exponential moving average. Okay, that just basically, it's a smoothing out of the last 10 candles you see on the chart. And it's a moving average, all right? I don't look at the crosses because they don't mean anything. They're just a waste of time. And again, people that use them, in my opinion, good for them. The one below that, that purple line just there, that's a 20 EMA. The last 20 candles smoothed out on a chart. So what I want to see is I want to see the moving averages fanning. And when I say fanning, I want them separated, like the peace symbol like that, right? Fanning, not like crossing your fingers, but like that, peace, that way, right? I want them fanning because it represents a nice trend, short to medium term. I do not use the 50-period moving average, as you will see many do. I do not use the 200-period moving average, as you may see many do, and I do not use the RSI, as you may see that many do. I used to use all 3 of these things until I became a better trader and realised that less is more. The MACD tells me what I need to know, because the MACD, which is this one down here, which stands for moving average convergence and divergence, that's how they come up with the MACD, the biggest Mac of all. I don't need to know the RSI. The RSI is more sensitive. It's kind of like that friend you tell the joke to and they go, no. And everyone else is laughing and they're like, it's because it's on me, and they can't take a joke. That's what the RSI does. It's a little bit more sensitive than the MACD. Now for me, I only use indicators to tell me when not to take a trade. I'll say that again. I use indicators like MACD, which is an oscillator. It's a lagging indication of price, of course. So, anything else I couldn't give two shits about, really. I really couldn't care less. For me, I use it to say, Craig, probably best you leave this one alone, mate. That's it. I don't use it to enter a trade. I don't use it to exit a trade. Simple as that. What do I use to enter and exit? Well, I use a checklist-based trading strategy. I've got 3 of them, and it's literal tick boxes. Yeah, I'm a normal, logical, thinking guy with no hair. These are facts. I try and make everything as easy as I possibly can, because the easier it is to get it right, the harder it is to get wrong. And that is how I live my life. And that is how I trade. All right? So it's literally tick the boxes trading. Remember, like paint by colors, Same shit, right? So what I'm using this 10 and 20 period moving average for is to give me a point at which I see equilibrium, a fair value price. So you don't want to be, buying something when it's massively overextended, and what's been introduced to me is the word FOMO. Now you might have seen your grandkids talk about it. FOMO. Now I'm only 35 and I still don't understand what these kids are talking about. They're only 2 years younger than me. I'm a millennial. I didn't realize that. And I'm like, bloody millennials. And then someone said, you're born in 84. I'm like, shit. I'm one of them now too, am I? So what I want to do is I want to find areas where I've got good pullbacks. So let me check this out with you, looking at 2017's run, and we're looking here at a weekly time frame. So let's say that somebody in this room is going, oh, dearie me, I've missed the Bitcoin opportunity. I haven't had the opportunity to go in and buy some Bitcoin in my SMSF or in my portfolio or whatever it may be, and you're going, I've missed the boat. This is how you can look if you've missed the boat or not, or when. Well, you don't know if you've missed the boat. Realistically, we never know. I can't predict the future. I'm there to trade the chunk in the middle. I'm there to make decisions on a daily basis. But if you have a look at this, right? Pullback in. Moving average is fanning. So that's the 10, which is the white line above the purple, which is our 20 period. When it pulls back into that region, I see that as a point of equilibrium. A point for which I start to go, I am now interested. I want pullbacks. I get crucified for saying the markets are going to pull back because everyone in crypto knows everything already. It's a very interesting space. Welcome to the party. It's going with a pseudonym because it's full of really mature people. But we're working on it. We're working on it. Stick around for the panel. You might see some of that sugar and spice. This little pullback here, another opportunity for a move higher. Another pullback here into that cradle zone. I call it the cradle zone. Why? I don't really know. You've got to name this stuff. I guess. It's like being held and then it grows. I don't really know. There's not any logic to that. It's just a name. Each time it pulled back in that 2017 run, we saw a magnificent move. Now, without showing you the exact statistics there, guys, 35.25% is the average pullback through 2017, taking in all those pullbacks. The average move from that pullback was 207% higher. So when you think it's gone already and you've missed it, think again. Use these moving averages as a guide. Now let me bring you to today, right now, and look at an even larger time frame. Let's hit up the monthly. So check this out. Price in that cradle zone right now. Bullish candle in that cradle zone right now. They're 2 rules that I want to see ticked. Now it's going to be really interesting to see how that candle closes. Whether this big move recently is going to be a spike or whether it's going to be a continuation, look, I don't know. I really don't. Right now, because it has just been a spike, I'm not trading it. It's not the market for me. I'll wait for that chunk in the middle. I want to just know that chunk's ready for me to go and get stuck in. I'll wait for my moment. I'm very patient. But bullish candle in that cradle zone right now, a break of that high. Geez, if the next monthly candle breaks the high of this candle, that's saying a lot for me. And if we break this high, we are looking very, very strong indeed. Using moving averages and price action And working back on the logic of trading, you can buy or you can sell. Keep it really simple, guys. It doesn't need to be hocus pocus. It doesn't need to be crazy and difficult. I'm a builder's son. I'm a labourer. Before I came to trading, I've been through London, all over the world with this, worked with some amazing traders. I've simplified a process, like I said, checklist-based trading strategy. It's pretty straightforward. Works in, well, I can't say this, but it works well where I have been before. Put it that way, yeah? All right, we'll keep it like that. Have a fantastic day. I've got 13 seconds. I hope I've done you justice. I hope I've waken you up, and I hope I've taught you something. Thanks for your time. Thank you.